Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Tuesday, March 25th. Is Oklo, ticker symbol OKLO, closed yesterday at a price of $30.91, being up almost 14% on the day, so looking really nice, bouncing from that 21-day moving average and that light blue level that I have going back to the lows from, it looks like, September of 2024. Did get a retest of it over here, but a big thing that I'm missing in what I'm talking about here is the after hours price action, because they did report earnings yesterday. It looks like, is there going to be a pop-up if I click on it? Yeah, on the 24th, they reported earnings yesterday, and we saw a pretty big pullback. And so in the pre-market, it looks like it's down nearly 6%, but we can just actually look at that on the 10-minute time frame and see actually, where it is corresponding to these levels. I do have that yellow 786 Fibonacci retracement at, let's see, 2613, and this orange line here, we're still actually above both of those levels, 29, right around there in the pre-market. So if I switch over to the the 10-minute, we are above both of those levels. So if it even pulls back more, I think dip buy an opportunity around 26. And so I wasn't really, I've got 3 shares. My average is around 30 or maybe 31. So I'm in the red a little bit now. So I would have liked to add more at 26 down here, but I just didn't have the cash on the side. So if it did pull back more, that would be, a nice opportunity in my view to get more shares at a discount, but not really seeing it just yet. Kind of disappointing there. We did see, push up in volume. So that was looking pretty good. But what were some tells maybe that, I don't know, it did switch just from, red to green. So, whatever pullback that we're seeing here, actually, 29, whatever it is, I suspect that will be bought up because we did see volume picking up yesterday before earnings. Did get above that 21-day moving average, and we've been below it, since the open on February 20th, have been trading below that level. And I think that reclaiming the 50-day moving average around 35, 39 is definitely in the cards for the coming weeks. So I am liking that. But before I do open up the chat, I did just want to come over here to look at, let's see, contract lookup, arbitrary, not looking at the specific contract. I just want the data over here for Oklo. And we can see that the net call premium yesterday did go up over $1 million, over $2 million. $2.17 million. Lots of buy-in of calls, and it looks like net put premium came down by nearly $400,000. And we can see that in red there going down as the stock price was going up. So this was actually suggesting that people were betting bullish on this, putting millions on the line. We can actually see this gap up in that net call premium. I actually might want to do a video on this later today because I find this to be really interesting. And so we see right around 1:45 in the afternoon, we see a gap up, net call premium from $1 million up to $1.77 million. And so if we look at the time frame of 1:46 from yesterday, open up a new tab to look at unusual whales, go to that flow feed. If we type in up here, let's see, I'm looking at Oklo, we can punch that in there, and to look at the data exclusively being from the 24th, we can see all of the data there with a minimum premium of $50,000, but I could probably up that to 100, and then we see those bigger buy orders premiums traded of over $100,000, getting up to as high as $731,000, which was at a time of 147. And so that does, let's see, does that correspond? It does very nicely with this jump up here. So the biggest order from yesterday was this one, which was buying a call. It looks like this is bullish on the ask side, and that is the $29 call for this upcoming Friday. And so that is what we were looking at. But it also looks like this, what is this symbol? This is part of a multi-leg option strategy. So this is the one that's a put for this coming week, 2750. also with a call of 33.50. So it looks like this position, all of these multi-leg trade there. And so it looks like, yeah, I mean, this is a part of that. Very interesting. And so this person just looks like they're kind of straddling, the upside and the downside, expecting, some volatile moves. So they got a put to 20, put to 27.50, and then also a call to 29. And let's see, a call to 33.5. All expiration dates of this coming Friday, 3 days to expiration, because that's Tuesday, Wednesday, Thursday, and then 0 days to expiration, with that expiration being on Friday. And so, yeah, this is in total, looks like over $1 million really betting on this trade. And let's see, visualize the P&L in the profit loss calculator. So that is something that, I am actually not too familiar with doing this. And so that's probably something I don't really want to dive into because I am not familiar with it. But anyway, just looking at this one specific contract that had the $700,000 on it, that is something we will want to keep an eye on into today. And so I might actually post, let's see. What we see here is yesterday we saw this volume here, which was, let's see, candle volume of 2,250. And what we saw yesterday on the 24th, this is going to be behind Ed, so I'm going to get him out of the way. We saw a volume traded of 2,670, and the majority of that, of course, being from this candle, but we saw a decrease in the, open interest. And so that open interest went from 2,692 down to 353. And so what it looks like was happening here is, let's see, I would imagine this would be somebody selling covered calls. And so this was actually kind of a bearish move, I would guess. But we did see, with this spike here, we did see a spike in that volume going up. So, yeah, I mean, so I would think that was, selling covered calls, I guess. I don't know. I'm a little bit confused by this because the volume's going up. So that would suggest buying. But we saw a decrease in the net call, or in this contract. So yeah, I would think that that's probably would be selling to close, or buying to open. No, it wasn't buying to open because open interest went down. So yeah, I just find that pretty interesting. So it seems like somebody's maybe hedging around, selling covered calls, basically. So I think that's pretty interesting. I would have to spend more time diving into this. Because it's a very interesting data here with that multi-leg part of that strategy. But yeah, I mean, I might actually just, it's interesting. So with that being said, with me not having much to add to that, I might just come back to the chart here and say, I think that if Oklo does come down to 26, I think that's a dip buying opportunity, and that would still be putting in higher lows here, because the lows from March 10th was 23.26. So coming down to 26, that would still be higher lows. And and even if it does break down lower, that's the 786. We do have the 200-day moving average, which is at 1892. So, and also 20 being below us, and this green line here at 1785. But yeah, I am excited about that, and I will open up the chat, but I am just going to bring Ed back and throw this up here because, as always, those are just my thoughts. If you did find them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like that.